And with that, it's time for our fourth session for today, FATF, Fintech and India's AMI regime. Are we ready for global standards? So let's pose this question to our three expert speakers today. This is a trialogue, ladies and gentlemen, that we have curated for all of you. Gracing this session is our moderator, Mr. Anuj Bhansali, Head of Trust and Safety, PhonePe. Let's have a big round of applause for him, please. Let's welcome Mr. Ilancheliyan V, Joint Director of Financial Intelligence Unit, Ministry of Finance, Government of India. Big round of applause, please. And we welcome Mr. Juspal Manic, Chief Revenue Officer at Featurespace. A thunderous round of applause, please. And with that, I hand over the reins of this conversation over to the three gentlemen.
Sure. Thank you, everyone. So, no, it's an afternoon session after lunch, so time to wake up, people. I know some of you haven't had lunch, so we'll keep it brief. Any idea how many countries in FATF? I am hoping that most of the people are from AML background. Come on, guys. Time to wake up. No answers? Guesses are welcome. Yeah. 40. Yeah, so that's 38 plus 2 regional bodies. That is correct. And how many FATF assessments has India gone through? That is correct. Can you guess the years? 2012. No. Come on, guys. Oh, it was in 2010. If I'm not wrong, sir, it was November, December 2009, and 2010 was the report when it came out. 2013 is when India was placed in a regular follow-up. So yeah, that's about FATF. What we are going to do is we'll continue with a few question answers because we have on one side a private player who knows and deploys these systems across countries, and we have on the other side the government regulator who understands the intricacies of what goes inside what we are not, purvey to. So let's get started. One of the great things that has happened in the recent assessment of India is that it came under a regular follow, which is one of the highest ranking. Now, with that, the findings that were there was that India was highly technical compliant, especially in the banking sector where it recognizes the ML and TF risks. Of the 40 findings, I think 25 or 24 were on largely compliant, only 3 or 4 were on the partial compliant. So it's in a very, very good place for a country that has become a member of FATF for less than 15, 20 years, that is from 2010, and doing these two assessments. So what we would like to dwell into is on two side subjects. What does the world see? B, when we talk about global AML standards, A, is India going to be a fast follower or is it going to be setting up new standards around? So with that, I would like to pass a question to Ilancheliyan, sir. The first one is, what is the role of FATF? What does FIU-IND do? So would like to understand more from you.
Yeah, thank you. Thank you, Anuj, and thank you all for participating in this session. So to start with, FATF, everybody has some fair idea. It is a global body, which is a well-respected body, which sets up policies, which recommends policies to various, to all the countries to follow in their fight against money laundering, terrorist financing, and proliferation financing. So basically, their recommendations boils down to 40 recommendations and the associated guidance. And FATF, what it does is it evaluates all the nations with respect to how their national laws and supervisory regimes and reporting requirements, how do they fare with respect to those 40 recommendations. So they undertake frequent evaluations, once in 10 years, now once in 7 years. And it has a bearing on everything, because it determines the cost of capital for a country. When a country goes and borrows something from the multilateral institutions, it's how does it fare with respect to FATF recommendation? That is one of the important criteria with which it is determined. It has a implication for entities operating in finance also, because when you get into any correspondent relationship or when you just scale up and go global, if a country has a very good AML policies, it reflects on your cost of capital. So this is something you have to have a very close watch on. And second, whatever cost, I mean, significant part of your cost of compliance is directly, flows from these recommendations. This is something that will that will always remain in future. Also, this compliance, even if we move to stablecoin world, this cost of compliance due to this FATF fulfillment of their recommendations is going to stay. So we have to, our processes, we have to make sure we also consider these recommendations while we design products, so that we can make an informed decision. It should not be an afterthought. AML CFT mechanism should be part and parcel of your product planning processes. So this is about FATF and the implications. Thanks.
So, Juspal, over to you. Based on the global expertise, right, that you have been deploying, I'm assuming, to multi-countries, what is that you see as a difference in AML, let's say, from the world, in India, and across different countries? What have been your learnings?
Sure. Look, first of all, it's great to be here. So thank you for the welcome. And it's the first time at the festival, so it's eye-opening, which is amazing. Let me just take a step back to give you a global perspective of what's going on. And the reason I think it's important to understand the global perspective is because you all have essentially the same challenges that you're dealing with. So if you just think back to the early 2000s to 2008 and just before that, we democratized the ecosystem. We encouraged fintechs to come in. We encouraged the players to enable more journeys, to digitize our ecosystem. Actually, we proliferated payments, which is fantastic. And that's exactly what we wanted to do, because by bringing that competition in, we've actually embedded better services, better capabilities. But as part of that, we've also had the push of real-time payments coming in. So obviously, we move money much faster. We actually move money in different types of behavior. So typically, the transactions are smaller, they're more frequent, which is brilliant. So as a result of that, we've now created an ecosystem where we need multiple frameworks to be able to put some controls in place. And in fact, if you look across the globe, and even some of the big regulators, they are all redefining their frameworks on AML. So the US obviously has the Patriots Act, or as with the Privacy Act they've got as well. They are effectively the regulatory body that pushes everything from ISA globally. But then you have the EU, for example, who have redefined their framework. And actually, a big core part of their framework is to introduce machine learning and AI to help support the AML space. And then you look at the likes of Singapore, very similar. They've got the banks together, very close-knit community to try and drive a new framework. So every one of these institutions around the globe are reintroducing a framework. Why? Because our behavior has changed. And also, traditionally, AML used to sit with the banks. But anywhere where you facilitate a payment or enable a payment journey, you are responsible now from an AML perspective. That goes from telcos, that goes from banks, that goes from retailers, all the way through to utilities. So you think about the world from an AML perspective. Historically, it was based on what a banking infrastructure looked like. Yeah. But now, actually, it's about the payment ecosystem. So we're seeing it across the globe, where there's been radical change going through.
Interesting perspective. From your perspective, what has India done as compared to the world? What are the similarities? What are the dissimilarities? Has India done something which is worthwhile for other countries to emulate?
Yeah. Just like Mr. Manic explained, there is a greater harmonization of guidelines with respect to AML CFT all over the world. I mean, this is something that we can't find much difference world over, and this is, in a way, that's a good thing, because people take it seriously across the globe. And basically, some commonalities, right? Every country has, strengthened their beneficial ownership registries and beneficial ownership identification. Then they have put in a very strong agency responsible for taking actions against money laundering offense. It is criminalized in almost all the countries. And then there is a strong reporting framework, which makes a host of players, right, from financial institutions to the non-financial institutions such as real estate agents and WASPs and accountants, the host of others who are having a linkage to financial transactions. They have been made as reporting entities, and they have been forced to undertake some risk-based risk-based AML CFT mechanism to detect and report such wherever they find some suspicion of money laundering. And finally, with respect to India, we have almost everything is in place. We have FIU in place. We have ED, which is nodal agency for taking actions, investigating and prosecuting this AML money laundering offenses. Something that is different from other countries are like, first one would be the way we have designed our reporting framework, which is almost done using FINET 2.0, we call it. It is almost it's all e-mode. I mean, there is no paper filings or something. It's a very sophisticated tool, and almost it caters to all the service providers, right from traditional banks to the small fintech players and accountants and lawyers also. They can report in a seamless manner. And second, another we have launched FPAC and REFAC, which is a public-private partnership involving law enforcement agencies and players in the financial ecosystem to have a two-way communications about what is that they are seeing in the field when the law enforcement agencies investigate, and how better these financial institutions can capture those suspicious or suspicious transactions or those alerts that can be converted into meaningful reporting that can be used up by the law enforcement agencies. So this is something that that was quite well received by the FATF evaluation that happened last year, and it has found a great mention in almost all global forums. So these were the basic similarities. And
so Juspal, a question to you, and this is something that I have been struggling around. AML, one of the issues that we see around is data sharing, right? Especially if you are group entities, if you are intercompany transfers, right? In world, what have you seen that simplifies this, or is there no equivalent? Because while it says that data has to be retained in that separate entity, and nobody should have access, because this is obviously a lot of PII data involved in that. But has any country across the world has simplified this or taken leap steps ahead, which other countries can follow?
Look, I think privacy and using data to be able to drive insights and manage your alert volume for like level 2, level 1, level 2, level 3 is very difficult. Mm-hmm. And I think most countries, if you look at institutions in there, they've tried to collaborate in terms of sharing data. But the issue you've got with sharing data is the aspect of one bank being able to share their data with another institution. And that's where obviously the regulator has a role to play, because from a central perspective, they could do that. One of the things that we're seeing the rise of, by the way, is privacy-enhancing technology. So we've seen consistently now the investment in that space where effectively you're doing federated learning, where you're learning insights between a group of entities. And what you're not doing is you're not sharing anything that's meaningful and that's sensitive, but what you are giving is a signal to demonstrate that this might look suspicious. I think the notion of AML for me is, the thing that's very difficult with it is, if you think about a transaction that comes in today, whether it's a card or a payment, your fraud team looks at it very simply, in a very simple way. Your AML team has a different view of that same transaction. So the question is then, there's this notion of banks doing FRAML, and typically it's never worked. People say it has, but co-locating teams together doesn't solve the problem. Giving them one platform is actually one of the answers. But secondly, then taking that extended to share it with the wider network is very difficult to do. So we are seeing regulators in the industry now trying to stimulate that. So I think one good example I could give you is like Pay UK in the UK. Pay UK did a POC to see how much fraud they could catch. But effectively, that same POC you could use for looking at, hey, is there any mules in the network? Mm-hmm. And in fact, one of the things that we saw as part of that POC is we found more fraud, but what we identified was a very deep mule network in the whole ecosystem. And you would never have known that unless you did the POC. Yeah. So it demonstrates to you that doing it at an institution level actually drives a huge amount of benefit, but actually what you're going to catch and what you're going to get more insights on is how deep the network is from a mule perspective.
Interesting. And you touched a very interesting topic, which is the mule accounts. That's been the heart of AML. Wanted to share an insight before I ask a question around on this. India has been leading in some of these technologies, whether you call it as a Jandhan or Aadhaar or mobile, so Jam Trinity is what we call. And we've been building stacks from the very starting, whether you're calling the identity verification stack, which is the Aadhaar, or getting all the bank accounts digitized across and access through multiple networks out. So the question to you is, with Jam, with Aadhaar stack, with a lot of these things, and now especially we have heard something called as a Mule Hunter AI that has been centrally developed and by Reserve Bank of India Innovation Hub, and that is getting rolled out in banks. Do you think that India has a chance now to redefine what the global standard will look like, or it will be a follower to what the Western countries have been doing around? And the reason I ask is typically a payment system like UPI was unheard of, right? And today it is the largest payment system across the world, doing 650 million transactions a day. So is there a chance that we might do something which is completely out and it sets up a new standard up?
Yeah. So there is no doubt, I mean, in the instant payment and the open banking area, I think India is the world leader. I can safely say that. And like you said, UPI is clocking about the more transaction than Visa undertakes in a year. And the second is that PIX, which undertakes about just half of what UPI undertakes in a year. So it's clear that we are India has a responsibility to lead this space. And there is always, like, now we have set up the standards of how to exchange information and all those stuff. It is stabilized now. The next phase of this is naturally how do we make the system so robust so that it is not abused by the cyber fraudsters and other such criminals. So we are seeing action in this regard. I mean, so many fintechs are actually participating in it through various initiatives such as RBS, Mule Hunter, and they are coordinating with the telecom regulatory authority to have some systematic fraud risk indicators which can be used to weed out those mobile numbers which are used in cyber frauds. And we have been working with Finance Ministry also to determine how best we can how best we can have some sort of negative registry against which these transactions can be scrubbed. So there are various means through which we are trying to work out a system that can be replicated across the world. So certainly we can, recently we had a private sector consultative forum, which is an annual event that normally conducted in Europe by the FATF to hear from private players what is the next phase of recommendation should be, how it should evolve. So it happened in India. It itself shows that the significance that India has in determining the course of these instant payments and in general payment system as such. So we have, and second, another area we can take a lead is that we have entire host of customer base, right from a remote area, a customer who uses his bank account only for receiving benefit payments, to a financier, using his bank accounts for engaging in high finance. So this gives an opportunity to train and develop a model that is LLM that can use the principles of federated model, wherein we can custom make a tool which can be used by those who are coming up in the field. Let's say, for example, traditional models cannot be traditional models, and traditional tools for AML that are used by traditional banks and other capital market intermediaries cannot be used in the same manner as by the fintech companies or the cooperative banks or the DNFPBs. So this is something we can try to evolve a system that can be marketed all over the world. So these are the two areas that India can definitely take a lead.
Thank you. So Juspal, again, a thought process around, since you mentioned banks are no longer the custodians, right, of the payment transactions. It is moving to the fintech spaces and to new upcoming payment systems, which may or may not even be regulated, right? What do you see as a typical challenge between these fast payments, and given that you also work with Visa, right? So versus a card payments, right? What is the risk from AML standards that you see? And one secondary question I have is on the de minimis threshold. What are your views on the de minimis threshold from an AML viewpoint for different kinds of payments?
I have to correct you because we're actually owned by Visa. We're not working with Visa.
Yeah.
I have to say that because my bosses are in the crowd as well. So, look, I think the two things actually go hand in hand. So let's just go back to the way AML is looked at traditionally. Traditionally, it was either direct debit ACH based, also batch, all the way through to card payments. So we've lived our lives using those rails and monitoring those layers and a framework that responds to that. But actually, the world has changed dramatically, and India's a great example. I mean, the whole story around what you guys have done on real-time payments is phenomenal. Everybody outside looking in thinks it's a success story, thinks it's a great way to democratize the ecosystem. Fantastic. And actually, our behaviors have changed. And I'll give you a very good example. And I'll give you an example from my own perspective. Obviously, the UK is also very native on faster payments. But my daughter's 14 years old. She has a Revolut card. And she looks at payments in small micro payments. She doesn't do big transactions. She lives her life in very small moments. Whereas when I was growing up, I lived my life in big moments. So every time I used a check or I did a card transaction, it was associated with something significant. So the world has changed. So you think about the thresholds we have today, those thresholds need to be changed. Why? Because actually money laundering is done at a very basic level. There's a lot of testing that's done by the bad guys. It's actually a mechanism to push the money through the system. What they care about is getting the money through the system. What they also care about is not getting detected. So they're very good at testing, understanding the thresholds, but the thresholds are set pretty high based on traditional methods. So I think we have to start thinking about that. But we also have to recognize that we use these payment vehicles very differently. Fintechs have great insights. They can provide some thought leadership in this space because they're the ones that have the data. Most banks, I would say, and most players in the industry don't have enough labels to do machine learning. I know everyone's obsessed by machine learning, and we are too. That's why we were born out of Cambridge University. And one of the things that we realized coming out of Cambridge University is, look, your analytics are only as good as some of the labels that you have to be able to train that data, but then also to continue to feed the models. And I think one of the things that's consistent in the market is we're very good at creating models, but are we good at sustaining those models? Because our patterns and our behavior changes. So your models have to be adaptive. They have to be able to do it real time, because that's the other thing that's changed, is that fintechs and all these neobanks are very real time. The whole ecosystem is very real time. Whereas unfortunately, traditional players, batch, and unfortunately, that's the challenge that they've got, is moving across that panacea to make it all real time. So I think we can learn from that space, but I also think that the key thing is for us all is that we have to recognize that how we interact with the ecosystem has changed dramatically.
So interesting, and I think it's still learning on the fly, given the way fintechs are operating. You are seeing a host of cross-border payments. We are seeing a host of services, right? Whether you are saying it's a fraction real estate investment to VASPs, which are crypto investments that are happening. So a question to you, sir, on fintechs, right? What should their adherence be towards PMLA/FATF, right? What do they need to be doing around, and what they're not doing? Would love to hear from that perspective.
Yeah, as you said, it is the basic compliance activities that you have to do is across the world similar, and India is no difference. And a set of 5 activities you need to do. The first one is that if you are handling a customer's money in any form or in any way, you are bound to be treated as a reporting entity. And many a times we hear from fintech entities that I'm not regulated by RBI. I am just doing this thing, and so far there is no clarity on this. It is that doesn't hold water, because if you read the PMLA and the Section 2WA, it clearly says if you are a payment system operator, regardless of your regulatory approvals or whatever, you are still liable to report with FIU India. So this is something you have to keep in mind. And once you are clear that you are a reporting entity, what are the activities that you need to do? The first one is, you have to register with FIU India. It's all online-based registration. You need not come down to our offices. You have to just register with us, and you have to name your principal officer and designated directors. And then you have to have a systematic risk assessment plan for AML. I am sure many of you will be doing a risk assessment, but it should be tailored to AML risks that you potentially your products or services that is going to face when you start your business. And second is, based on your risk that you have assessed, you have to put in place a mechanism to, address those risks. That is very important. And the third part is that once you have put in a proper AML policy, you have to have a very good, robust customer identification policy. There we have got it covered because there is a tremendous work being done by Fintech companies and regtech companies. There are a host of service providers who offer a very good product suite that can be used. And once you have done that CDD, you have to monitor it, and wherever there is some sort of suspicion that is not matching with the original CDD that you have done, you have to report it to FIU India. And then finally, when there is a suspicion, which is the definitions are clearly given in PMLA and PML rules, you have to make sure you are reported, those suspicions are reported promptly and without it tipping off. Only the complaints team should be aware of it, and nobody else should be made privy to that communication. And finally, you have to have maintained records even after you end your relationship with a given customer. For 5 years, you have to hold that records. So that is something you have to be mindful of. And finally, it goes without saying, trainings. Trainings are quite important because, particularly with respect to fintech space, every innovation, it's happening at a faster pace. It's very difficult to keep track of it and associated weaknesses with respect to AML. So we have to be, your teams has to be properly trained. So these are all the basic tenets. If you are mindful of these things, then you are almost covered. So make sure that you don't rely on your registration status. If you are doing this, whatever, handling funds or acting as an intermediary, then you are covered under PMLA. Please, if you have any doubt, you can always reach out to us. We will be helping you. And we have a very good experience, and we have veterans like Anuj and all. They regularly organize trainings for upcoming fintechs through RFAC. You can always reach out to them. So this is my message here.
Thank you, sir. So Juspal, you had touched on a very interesting topic which is close to me, which is the FRAML thing. So I personally basically gotten the fraud and AML teams together, and while you are correct in one part of it, saying that just getting them together doesn't solve for it, trying to get them on the same tool, and we do see efficiencies around on that. But the question I wanted to ask you was slightly different. See, typically fraud is a real-time system, and AML has always been about delayed signals, right? Multiple days after a transaction, you get a red flag, you investigate that, you file a STR or a SAR, and you get done with that. How do you see that changing from a real-time landscape, given that there are fast payments that are moving money within minutes or seconds, right? And not just within the same country, it is across countries also that is happening across.
By the way, he called you a veteran. You look too young to be a veteran, I'd say. Actually, it's a great question, especially on the move to real time. And I think there's a couple of things for me on this space, which I think is pretty interesting. Firstly, I think if you think about the notion of how fraud is today and how the fraudsters behave, I mean, just think about the challenge we have on faster payments. I mean, we blame our fraud ops and fraud strategy guys for not catching it. But really, the question should be asking, why didn't the AML team also identify it? And part of the challenge is that, I think the guy previously was talking about a needle in a haystack. Yeah, and actually that's very true. Yeah. But with modern machine learning techniques that are out there today, you actually are able to get a good degree of accuracy of what looks like a genuine transaction. Why? Because, we have enough data now to understand what really good looks like. But secondly, you also have a good understanding now of what mule behavior looks like, what romance behavior looks like, purchasing fraud looks like, all the way through to investment. And I think one of the things, what we always see and discuss on our side is when you think about the signals that you get, you do have the ability to try and drive it from an alert perspective. I think everything is driven by how many alerts you can support. The honest answer is you can't alert yourself out of the situation, right? And so I know a lot of our organizations try to think that the more alerts they get, the more intuitive and the more they're going to catch. It doesn't work like that, unfortunately. Yeah. And so again, you think about cross-border. India's a great example. India has done a fantastic job of getting its talent pool to be in different parts of the world. And it's amazing, by the way. And the amount of remittance that comes back and forth, it's phenomenal. But within that, a fraudster sees that corridor and says, hey, that's a brilliant place for me to go and play and hide. But actually, there's enough signals in that data to know what a genuine remittance looks like to what looks like mule behavior. And I think one of the things I would say to you is, the more you perpetuate the situation by not making it real time, and that means moving your legacy systems from rule-based to machine learning, then all you're going to do is you're going to be catching it after the effect. And by the time it happens, the money has gone. And by the way, they don't use one account, they use several accounts. So again, we see the behavior moving several times. And in fact, typically what we find is it doesn't move once, twice, three. The average time is 6 times it moves. And by the time you get there, it's gone. The other thing I would say to you on the real-time piece is we're very good at looking outbound. But actually what a responsible FI should be doing is looking at the inbound. Why? Because there's strong enough signals to understand what inbound looks like and whether this is coming from a place where it looks suspicious or has harbored suspicious behavior. So I think the key thing for me, I would say, is that there's enough signals in the data for looking at the mule behavior, but also there's technology out there that can actually support that whole FRAML concept, but from a real-time perspective.
Yeah, so interesting. So I think I will ask one last question to both sides, right, and get a differing viewpoint. And I don't think any discussion can end before we discuss AI, right? So typical the AML systems or even the risk systems that have been designed were always rule-based, right? So put in an RFI1 or a fraud rule 1 or a fraud rule 2, and AI has the capability, or machine learning has the capability to run through in milliseconds. Now, the biggest challenge that you get into is the explainability. Rule is very clearly explainable. Here was the input, here is the output. With the AI model, the explainability goes away. So, and that is what I would want to have both sides' opinion on. How would a regulator look at this kind of a system where it kind of becomes a black box, but can produce great results, but you would not know what gets missed because what gets missed is missed, right? So how would you, let's say that an AI model which is deployed for fraud detection, whether it's a mule account detection or it's just a suspicious transaction around, how would you get an explainability if an organization were not to do a traditional rule-based, and how would you evaluate them? And the same question to you, right? What becomes the biggest challenge in convincing, let's say, because you work with a lot of banks, right? On convincing them, hey, this model is much better than the traditional 30 RFIs that you have been implementing. So over to you.
Yeah. So as rightly pointed out, the practice of rule-based and RFI-based alert generation, STR generation, it has had its time, if you ask me. Now the payment system has changed, and the speed with which transactions are happening has changed. Now we have to try to attack this problem with in a fresh set of ideas. That's where we have to somewhere transition from rule-based thing to smart and some sort of some predictive tools. We have to go in for predictive tools that are backed up by a solid AI models which can be explained. Explainability is always going to be a problem because see, the data is proprietary and it is all bound by various privacy legislations. So, due to which, particularly some bigger banks may have a very good rich database through which they can train their models, but it may not be the case with the new age fintech companies or small financial players. So how do we bridge this gap? That's where world over we see this regulators or FIUs are coming together and trying to involve all the players. Singapore MAS is taking a big lead in this thing. So what we are trying to do, even in our case, we are trying to work with FCC and interested fintech players. We are trying to pull together a set of companies who are exploring the ways to share anonymized data in a federated model wherein they can run the models with whatever database that whatever information that FIU has, because FIU has information filed by almost all the financial entities, and we have a very good database which can be used for training the models. So if we can try to customize from the check our weightages and all the parameter weightages for the AML model that are specifically designed for fintech players, maybe we can explore it, and we can. I say fintech because fintech players are quite tech savvy, and they can come up with a very good models that can be explained. And using that model, and if we test with FIU database, we can get very good results. That is our thought process, and we are working towards it. Maybe if we can come up with, if we can satisfy our legislatures with respect to personal data, I think I see future there, and it's a matter of time. In a few years, we'll be moving out from rules-based and RFI-based thing to predictive and smart AML targeting.
Yeah. Juspal.
Yeah, I was amazed when you said you can understand some of these rules that are written, because trust me, some of them are pretty badly written. There's three things I'd probably say very quickly. The first is, for us, we've lived moral governance for the last 16 years. And that's pretty important. I think where most institutions, whether it's an FI, whether it's a fintech, whether it's a utility provider in the network, they should have very strong moral governance teams. Why? Because actually using that data and developing models, there needs to be a very clear framework to make sure there's no bias in there, and also you're not overfitting the model. So that's the first thing. The second thing is, from our perspective, one of the things that we do very well is Featurespace comes from Cambridge University. That's where our origins are. Our research is based on that. So our research that we do on model development is based from an academic perspective first. Why? Because actually we believe in testing multiple theories first before we release a model. And in fact, that's been responsible, actually. And as part of that, you also have the explainability bit, which is simple thing, reason codes. Like, what does a reason code mean and why is it generated? That's very, very important. And the last thing I would say for the market is, we've got the regulator sitting a few places from me. You should be doing as many pilots as you can. And why? Because there isn't a big bang solution that's going to solve it. You have to iterate. You have to go through and validate whether some of the assumptions that you've made are valid. But actually doing pilots, A, you get a collaborative spirit. But B, actually, you've got a great community that you can do it with, and you've got a very pro regulator as well.
Yeah.
So
Yeah, that we are really thankful for. Any questions from the audience?
Yeah, absolutely. First of all, let's have a round of applause for them for that very engaging talk. I'm sure we can continue, but in the interest of time, we'll take a quick question from the audience, please. Kindly raise your hand if you have a question. We'll bring the mic to you. Okay.
Hi, I'm Prashant. So nice to meet you all. Thank you, sir, for coming and enlightening us. So I have a question for Juspal. Just wanted to understand, FATF recommendation 18 talks about your foreign branches and subsidiaries. And it is relevant to a question which Anuj asked you about your group level monitoring. So it says that you should have policies and framework and governance which should be across all the group, and it should be consistent. And there has to be, some data sharing that has to happen to the group entity. How does it happen, in foreign countries, and within systems? Is it capacitized, or it is manual data flow that happens? And the basic of this question is because it is enabled in FATF, which has come on to PMLA, and then it has come to a master direction for which we have also to implement. So in terms of your technology, how do you implement it?
That's a perfect question, by the way. Thank you. And I'll tell you how we've solved it. I'll give you a real-life example. So one of the biggest banks globally actually uses our platform, and we support them from a fraud perspective, but also now we've extended that to AML. So their central head office use the platform. They're the landlord version. So we have a multi-tenancy platform. So they're the landlord, so they run it from head office. But what they have in their different geos, there's 7 different geos that they have, they use a tenanted version of the platform. So what they are able to do then is to send signals between themselves to say, actually, this looks suspicious behavior, especially when the consumer or the business is doing cross-border, for example, right? You can share those signals. But more importantly, it gives them the power analytically to have their own set of analytics locally. Because every geo is very different. That's important. You've got to respect the local laws there. But from a central head office perspective, they want to make sure that they are not exposed. So actually, so we do it today. We do it through our multi-tenancy capability. And we have a number of institutions that actually use that to solve that problem. But they solve it from a fraud perspective. But now we're actually doing it for transaction monitoring on AML as well now for them.
Right, we'll take one quick question, please. The gentleman here.
Insightful session. Thanks a lot for that, first of all. Question for you, sir. FIU, RBI, and DOT, multiple regulators in different branches, and I'm sure your body of work overlaps with one another, right? So you spoke earlier about RFAC being a public-private partnership. So how does that well-oiled machine work inside the government, where the body of work overlaps with different government entities and regulators?
Yeah, like I said, it is particularly with respect to instant message, instant payments. It is kind of, it is in a state of flux, I would agree. But the problem with respect to overlapping, it's not, it appears overlapping, but it is not so. I mean, because FIU, we are solely responsible and we are taking care of reporting, and wherever means to smartly identify those cyber-enabled fraudsters, and if there is some central body acting behind these mule accounts. RBI is particularly interested in protecting the integrity of financial system, because mule accounts disproportionately affects the banks. In significant energy by the banks is devoted to combating these mule accounts. And coming to RFAC, it's like it's an industry grouping. It cuts across all the activities with respect to AML activities and training, AML certification, and sharing of typologies. So this is, to an extent, it involves fraud and money laundering. It is overlapping, I would say. But the thing is, everybody is having their own skin in the game. That's why it may appear to be overlapping. But the guidelines, whenever we are issuing it, but only with respect to our own domain. It's not something, it's confusing or, disconcerting multiple notifications and guidelines that you have to be bothered about. So.
Well, on that note, we conclude this session. Thank you so much once again for that wonderful trialogue. Let's have a big round of applause, please, for our speakers. We'll take a group photograph, please, requesting our team to kindly take the picture.